What's going on? If you are watching this back later on, just let me know if you have any questions. But I'm doing a live session right now. But for those of you who are in the Discord right now and you are watching this live session live, welcome. Hope you guys are all doing well. First thing I want to touch on today is kind of a couple basics of options. I'll also record a video in regards to just how to set an order, what different things mean. But I'm going to start by showing this little video that someone has made. And I thank you very much for that because that's very helpful. But I'm just going to play it to you and I'm going to kind of talk to you along as it goes, right? So here, first of all, he's written pay, P-A-Y, PayPal, right? P-Y-P-L is the ticker symbol. So that's the stock I called out in the chat today, in the small accounts challenge specifically. So that's PayPal stock. If you are trading on Robinhood, and I'll show this on Webull later, if you're trading on Robinhood, you'll go to click trade at the bottom, click trade options, not buy. If you buy, you're buying shares, you're buying long term. But we want to buy options, right? Options and different dates come up. All of these are Friday. November 15th is this Friday. November 22nd is next Friday. November 29th is the Friday after that. And December 6th is the Friday after that. So the reason these dates are there is because they are expiry dates. When we are purchasing options, we are purchasing contracts of a stock. So we don't own the stock. We have the right to buy the stock, but we do not own the stock. We are purchasing this and we are expecting price to move before a certain date. So for example, right now, I have paused the screen, right? PayPal, ticker symbol PL. You see a November 15 expiry. You also see it say share price $86.25. $86.25 is the current price. Some of the prices you see on the right are called premiums, 0.82, 0.65, 0.50. On the left-hand side, you see $87, 87.5, 88, 86, 85. So all of those on the right are premium. That is how much you pay. If you see 82 cents there, that is equivalent to $82 because it is multiplied by 100. I will drop a video after this as well. For those of you who really have no idea in regards to what I mean when I say it is multiplied by 100. But pretty much one option contract, so buying one of these, is equivalent to 100 shares of PayPal. So when you're buying one of these, you have the right to buy one $87 call for 82 cents. Now, what that means is if I click buy here, and I'll show you examples after, right? Might even show you, it doesn't show you here. But if I was to click on this $82 cent point, right? And again, I will link a video with a great explanation with this video, with a on-screen example of this afterwards. If I was to click on this 82 cents and click buy, I would buy an $87 call for $82. What this would mean is the share price right now is under $87, right? I would expect PayPal to move towards $87 or past $87 before or on November 15. When I say that, what I mean by that is I am buying PayPal calls, right? PayPal call options in an attempt to see the share price move above $87 by this date. This is a call option. This is when I think the stock is going to go up. A put option is when I think the stock is going to go down, which we're not going to get into today because it's a lot of technicalities to start off with. But long story short, if I write in the chat 887C, yeah, no worries. What I was saying was, and I'll put up an example in a second as well. If I am buying, here we go. If I am buying this, yeah, this is exactly how I write. So I write PayPal $87 call 11:15. I'm buying PayPal options, call options, and my strike price is $87.50, and I would be buying it at here. It will be 65 cents. So this is why I say to you guys, you need to set limit orders, not market orders. A market order is going to make you buy this for 68 cents. Meanwhile, I'm telling you to buy for 65 cents. A market order is going to tell you, my market is going to execute at the highest price, which you don't want, right? Imagine you go to buy shoes, you want to bargain, you want to negotiate, and they say, look, people are trying to sell it for $68, people are trying to buy it for $61. You want to go somewhere in between, right? You don't want to just pull up and just buy it for $68 because what if you go to the next person and he'll sell it to you for 65? You want to save your $3, right? So you want to buy around the mark. And to buy around the mark, you want to set a limit order. Do not set a market order. Now, one thing when it comes to callouts, right? It's not always going to go our way directly there and then. So if I say I'm still confident in the trade and you see, let's say the mark dropped down to 59, right? And I've already put a mark of 65 in the call out. You can still go and buy it for 59. You're just getting a better deal. What you don't want to do is buy it higher. I mean, sometimes you might buy it higher and still come out cool. That's fine. But if it's dropping, you don't want to click a market order. You don't want to click a limit order higher than whatever the mark is. You want to buy it at the price I've set, maybe a dollar or two higher, or preferably, in most ideal situation, lower. So when I say I'm buying, let's use today's example. Today's example from small account challenge. When I say to you guys, I'm buying PayPal calls at $84, you want to get in around $84 or less. If you can get in less, that's also fine. You definitely don't want to get in at 89, 90, 91, which was someone you're doing. No, you want to set a limit order for 84 and it will come back down and fill, or it might not fill. That's okay as well. There'll always be more callouts. But what you don't want to do is buy at 95 cents and then it drops down to 65 cents and now you're panicking. Because then it's more stressful for you. You know, you have to stomach that for no reason. And that's just not what you want to do, right? So again, you want to go in, set a limit order, and you want to make sure that when you set a limit order, you leave it there. You go, I don't know, drink coffee with your housemates. You go do I don't know what. But you don't just go in, buy in at market order. Market order is there to screw you, okay? Let's think of it that way. Market order, there to screw you. Limit order, there to save you. Let's think of it that way. 1 second. I'm going to pull up a little document for you guys. Oh, wait. Let me see if I can do this a different way. Give me 1 sec. So one of the things you want to make sure you do as well. 1 second. Trying to find this thing for you. I'm gonna do this. I'm gonna give you guys a good example so you can see exactly what I'm referring to. Just trying to figure out how to share screen on my Webull account while it's still on my laptop. Right, I'll figure it out now. Hold on. Okay, so I'm gonna do. I'm gonna drop a screenshot in the chat now, and then that's gonna be what we look at next, just to make it a bit clear. So if you guys go to the lounge chat, which is on the right-hand side, and if there's any questions, just let me know, right? I'm gonna drop for you in the lounge chat right now. All right, so go to the lounge chat. We're all in the lounge chat. Hold on. Lounge chat. Okay. Let me know if you can see the screenshot from the lounge chat right now. It should be on screen, okay? So here is the screenshot, right? At the top, we have the stock, PayPal, $87, which means PayPal, $87 call. As you can see, it says call 100. That means, again, one share is 100 contracts, right? But you can see it has open P&L. That's the amount that we're up, and then the day's P&L in total. The total cost is in the middle. The total cost is $336. That's how much it cost me to buy that. The total market value is on the left, 348. So I put in 336. I now have 348. Okay. The quantity in position is 4. So that means I have 4 contracts. Okay. Remember, this is a screenshot from the callouts. As you can see below, the bid price is 0.85. The ask price is 0.89. You want to go closer to the bid price and set a market limit. If you are a newer trader, you do not want to buy at the market price. Market price buying is going to screw you. As I've said before, if you want to actually learn how to do the options and all that kind of stuff and go in depth, you can also look at the option pack. DM me or write in the chat if you want to know what the option pack is or where to find that. But let's go to the chart now. Let's go to TradingView to look at the chart. So I can look at PayPal and then we can kind of talk about what it means for us, what we're trying to do, all that kind of stuff. Okay. So let me know when you can see PayPal stock on screen. Let me know if you can see PayPal stock on TradingView. Thank you. Okay, so now let's talk about price targets, aims, what it means when we're buying, what we're selling, all that kind of stuff, okay? So PayPal stock, here we are. This is a chart, a stock chart. I know some of you had DM'd me earlier, asked me what that student charts tab was about. This is it here. This is it, right? So I'm just making sure it's recording properly, which it is. Okay, so PayPal stock. This on the screen is called the daily chart. Every single candle here represents 1 day's price action with the stock PayPal. What do I mean by 1 day's price action? It means where the stock moved up to or dropped down to within a singular trading day, a 6.5 hour period, okay? Everybody in the world has access to these charts. Just go on TradingView, go on Yahoo Finance, go on Bloomberg, CNBC, anything. You know, I'm not on anything special. Now, on another day, we'll get into these purple, orange, red lines, all that kind of stuff. These horizontal solid lines are my levels of support and resistance. Again, we'll get into that another day, but those are basics. If you want to look at support and resistance, go to the Newbie Traders chat. We have videos on that there. I also have videos on my YouTube about that. But what I want to highlight is, so this is PayPal's daily chart, right? As you can see, in August, it was $65, September, $72, October, $79. Now it's November, it's $80, right? PayPal is getting more pricey. It's getting higher. The price is going up, right? So if we go to today's chart, and I'm going to go to the 15-minute, right? What this means is everything you see here, the price action during each 15-minute period is represented by these candles, okay? So when I say for me, the price target for PayPal is $87.10, that means the first price I want to look before I sell any of my PayPal options is $87.10. So that's up here, okay? Now, that means if it doesn't reach here, I don't plan on selling. On the other hand, I would also look at, the possibility that it drops, okay? So I would look to see, okay, and this is what I mean by support and resistance. Again, we can talk about that in full another day. I would look at level of support here. So if it drops all the way to $85.79, I would like to get out. That is around probably a 30% loss on my options contracts, right? We're up right now, I think, by 6 or 7%, maybe 8%. If it drops down here, we'll be looking at probably a 30% drop loss on an option contract. If it rises up here, then I'll be like, okay, I'm happy. I'm confident. I could sell a contract here. If it breaks past it, again, I'll have a new price target, which would probably be today's highest, to be honest, around 87, 86. But when people ask me, what is the PT? They're talking about the price target. What do I mean by the price target? A price that I'm looking to target when it comes to the stock moving upwards in my direction, in my favor. Okay, so a price target to the upside would be above the current price, right? $87 is higher than 86. A price target to the downside or a stop loss would be 85.79. 85.79 is less than 86.40. Any questions on that? And also, I'm not able to see the chat, so if there's people that got questions and they can't unmute their mic, I won't be able to see what's up there. Maybe I can try and look with my phone. One sec. Okay, cool. Any questions so far? No? Sure. So PayPal is in an uptrending pattern. Okay, you can see this here. This is the hourly chart. All these candles represent 1 hour price action. PayPal continued to bounce along what I call my moving averages, the orange and the purple line. Now, what I was trying to do, you see how I wicked off here, is trying to take the trade up higher. And when I say up higher, I mean this, exactly this. Every time PayPal falls to the moving average, it pushes on higher. It pulls back to go on higher. It pulled back, consolidated, and I'm just looking to get into the trade before it again continues the uptrend that it's been in. It's been in a great uptrend, like I said. It's been continuing uptrending. I'm looking for it to continue uptrending. This is a bit of a bull flag here as well. It's looking to move higher. The price action is likely to go on higher from here. It's bullish. That's a great question. I'm not sure who asked that question, but it's a great question. Great question. You in terms of where the price action on the chart, or in terms of the numbers like 8, 9, 90, blah blah blah. Okay. So right. So that's a great question. So there's a few things, right? The reason I say people you can get in, so I call it 84 cents, right? The reason I tell people you can get in at 85, 86, that's okay. But I like you to set your limit at 84 and go higher is because, sorry, and not higher is because if you look at the price action, right? This is even, I was looking at the hourly chart, but um, look at the price action, right? Every time on the hourly chart, we're going to go to the smaller time frame in a minute. On the hourly chart, every time it pull back, it bounced on the moving average. So my point is, if it's up here, it might not be ready to go higher yet. That's what I'm saying. You just wait till the price is down here again, and then you ride the trend, right? So when price is up here, it's probably 90 cents, 92 cents. I think we got up to 97 cents today with PayPal. Why not just wait? Because it's probably not going to blow yet. It's going to keep coming down before it go up, keep coming down before it go up, and then go higher. Like, see this little pattern here, right? So what I'm saying is, if I call it out for 84 cents and you can get in at 85, 86, that's okay. But it's better to set your limit at 84. If you get in the trade, great. If you don't get in the trade, you can catch the next trade. And if you do get in the trade, then you've got to be more careful with your profits. So there's a couple of different decisions you need to make. If I call out 84, if I call this trade out and it's at 84 cents and we pull on back, let me go here. So if I called it at 84, I don't remember what time I called it. Actually, let me check for you. It makes it a lot easier as well. Where is it? I called it at 10:32. So that'll be somewhere here. No? 10:32, okay. So that's why. Okay, 9:32. So I called it somewhere here, I believe, and might have even been here. 10:32. Okay, so PayPal was somewhere here when I called it out, right? It pulls back, goes higher, pulls back, goes higher, pulls back, and then it consolidated. If it's already pulling back, that's not even possible. 50-minute chart. UTC minus 8. That's, oh, I know what it is. Here it is. Okay, yeah. Here we are. So, okay, here we go. This is a lot easier now. So this is the 5 minute chart, okay? Here's a hammer candle, but either way, PayPal was up here somewhere. Every time it pulled back, it went higher. It pulled back, it went higher. These are the wicks. These wicks are talking about telling us where price action went within a 5 minute period, okay? Because this is the 5 minute chart. Every time it pulled back, it went higher. Now we got up to this point where we're up here. It's a little bit overextended. The wicks are long. The body's also long, but the wicks are longer. You want to wait for it to pull back again somewhere here. Like this wouldn't have been a bad entry. I wouldn't be mad because above the moving averages. Price above the moving averages. It was consistently bullish at the time. It looked like it was going to hold and continue going higher. Now it pulled back even more, and that's the problem with getting in up here. You don't want to get in up here away from the moving average. You want to get in close to the moving average. Even here, it sold off so much, but we were only down about 16, 18%. I'm not even sure how, but yeah, we weren't even down too bad. Again, if you can get in around here, close to the moving averages, it's gonna benefit you a lot more. So again, it's my strategy. The way I trade, it's going to take a bit of time to get used to it. But there's a reason why I told everybody, even though I was using Webull for the first time, I've put my limit order in. I'm sticking with that because I'm trying to read a chart while I trade. So I put my 84 cents in. That meant price needed to come around here for me to get filled, and it was supposed to go higher. Obviously, I got my 84 cents filled here, and it went lower. Fine, no problem. We're holding. We're down 18 or 20%. That's fine. Either way, it's better than setting a limit order or buying a market order at 95 cents up here. It's better to just put your limit order at 84 cents, wait for the trade to come to you, and then it's going to come back up eventually. You know, it came back up at the end of the day. So we got in around probably 86.37. We ended the day around 86.46. It's not no big gains. It's fine. But on the bigger time frames, it's consolidating. It's consolidating. It's taking its time. It's building up. And eventually, potentially by Friday, we see us back up, near 88. I hope that explained the thought process behind it. I hope that cleared it up a little bit. It can sound a bit confusing at the beginning. Mm-hmm. Yes. Great. Any other question before I talk about the next? So your first question, what makes me? So your first question was about the daily chart, or what? Okay. Hmm. Yeah. So when I look at PayPal's daily chart, it's bullish. I've been waiting for a day where it sold off a little bit, where it's pulled back a bit to buy into calls. Why? Because I'm a firm believer that this stock just wants to continue going higher. Price is a little bit away from the moving average right now, but it doesn't matter. Look, no, it wasn't even this one. It was, what was the stock that? Chipotle. Okay, yeah, Chipotle. See how price is away from the moving average right now? Moving average is around 58. Price is around 60. Same with PayPal. PayPal even more. Price is around 86. Moving average around 82. It's overextended. It's overbought, but it still wants to go higher. It's bullish. It's clearly bullish, and I'm trading the trend here. Like, not every single stock is going to be tight to moving average like Walmart. Walmart is close to moving average, just tight to moving average. It's a good call play, which is why I called it out yesterday. But it's tight to moving average, so it's a little bit easy to trade that. PayPal, it's not that it's gapped up, but it's extended. So when it pulls back a little bit, it's not pulling back all the way. It's too bullish to be pulling back $3, $4, $5. I'm just trading it in the way that it's. I'm just following the trend. I'm just trading the trend. I'm not trying to do nothing crazy. I'm just trading the trend. That's all it is here. So PayPal was because it was down on the day. It opened a little bit. It opened a little bit funny because it kind of shot up and then pulled back. And I'm like, okay, I'm waiting for you to pull back so I can get in. Obviously, it pulled back enough where I got in, but it still pulled back a bit more. Entry could have been better, but it's okay, right? So that's why I took PayPal off the daily chart. Second question, yeah, go ahead. Hmm? Okay. To answer the second part of your question, why I chose to swing it, because it's consolidating. Look at the hourly chart. Okay, we're gonna do this 4 hour. Okay, 4 hour. You can see it's holding. Hourly chart, consolidation, mania. Again, daily, just look like this. Just like it's daily looks nice. Just like it's pulled back a little bit, ready to go higher, ready to break out. Again, 4 hour, just holding the moving averages nicely. Price wanna go back and test those levels. 1 hour, consolidation. And again, why would I swing this? Because all we need is that bullish momentum tomorrow. It could come from the other stocks in the payment industry. It could come from just the tech stocks running. It could come from anything. I'm just looking for a continuation of bullish momentum. This is all bullish to me. The PayPal's, the Walmarts, the Chipotle's, they're all bullish to me. A stock which maybe ain't as bullish is an AMD. You see, you look at that hourly chart. If I was in calls, I wouldn't swing that, right? That's not looking good. I wouldn't swing an AMD call right now. You see, I wouldn't. But a PayPal, where everything is above the moving averages, where it looks looking like it's pushing higher, why wouldn't I touch? Why wouldn't I swing calls, right? I've got a good chance of winning. And the worst thing that can happen is it drops off a little bit overnight. Well, we're already up, so we might end up down 5 or 10%. That's okay, but it's not one where we're already down, we're losing. No, we're already up. I still think it's got more upside, and I still think we can come away with a solid 40 to 50% with this. Yeah, the nine, the All right, so great question. Thank you for that. So I like to switch between the 9, 21, and then the 50 or the 200. Right now, I've got the 200 up, okay? I mainly use the 200 because in some of my favorite setups, sorry, we're looking at AMD, right? AMD, here we go. So my favorite setups, if it does start to run, if it does start to push up, I can use this as a price target. Just this moving average. The 9 and 21, they're better for the intraday, the day trade, the entries, the swing trades. That if I want to get a longer term price target, if I was to get an AMD call for next week, let's say, if it starts to start showing some signs of bullish momentum, I'll look at the 200. That's what I use the 200 for. Even a broader range when in comparison to the 50. The 50 is showing the same movement as the huh? Um, Give me one sec. I'll mute him. He's gone, yeah? No. I done it. I done it. Okay, yeah. In comparison to the 50, so the 50 kind of moves similar to the the similar direction to the 9 and 21. So I wouldn't really like to use this as a price target because it's kind of doing a similar movement. Sometimes I will use it for something else. Like here, if I was swing trading, sorry, not if I was swing trading, if I was just trying to gauge momentum on a day trade, sure. But if I'm trying to gauge for price targets and look at a different perspective, then cool. I will look at the 200. So again, the 200, sorry, daily chart. All right, daily chart, here's the 50. Cool, it's just doing the same thing as the 21, same exact thing as 21. So I don't really find it necessary if I'm looking for the longer term perspective. If I look at the 200, it's different. Okay, 200 is flattening out. 200 is flattening out. Price is around $151 over a 200-day period. Okay, again, that is consistent. That is where price is consistently at over a 200-day period. It's not as bearish as the other two. Here's a good example: ExxonMobil. Okay, we're trading above the 200 MA, well above the 200 MA. If you look at the 50 MA, look how close the 50 MA is to us. So I'm like, okay, price in the meantime, next couple of days, is going to be staying around here. If I'm looking for a swing for 2 months, 3 months, I need that 200 to give me a broader perspective. But a 9 and a 21 alone, they're really enough to do the job. See, 200 is down here. I can know, okay, if price drops like it did end of October, where could we be dropping to? Near that 200 level. If I'm intraday, sure, then I'm looking at the 50. But overall, if I'm looking at the swings and all that kind of stuff, the 200 is my go-to for the third MA. Say again? What did you say? Yeah. Yeah. I traded this stock, TSM, puts on this stock, from August to, wait, TSM? Was it TSM? No, not TSM. TSM is Taiwan. So, um, TSN. No, TSN. Aha. Thank you. I traded puts on this stock from, well, I was in it a bit earlier, so I was down actually. End of August, though. So probably around $64 until almost October, right? End of September. Moving averages crossed to the downside. And the $200, sorry, the 200-day moving average was a good price target. And I actually sold before it got to that level. But again, if I was using the 50, so that was probably like a 20-day swing, 30-day swing. If I was using the 50, I wouldn't have a low price target based off the moving averages. I could draw support and resistance, but I wouldn't have a price target based off the moving averages. So right now I've got a 200 and I'm trying to swing for longer term, then yeah, that gives me a good indication of where I should be looking to trade the stock to. Now you see how price is hovering around the 200 moving average a lot, right? That's why. See how price is hugging tight to 200 MA. It ain't doing that with 50. If you look at the 50 and you only look at the 50, then it's looking like it's in free fall and you don't know what could be happening. Not necessarily. You're like, why is it hanging around these prices? Oh well, hello Helga. The dog came up to say what's up. All right. So yeah, if you look at this, 200, I have a price target. I have a price where I think price is holding, etc., 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 and then boom. Otherwise, if I'm just looking at 50, I'm like, I don't really know what I'm using it for, unless it's intraday, 15-minute, 1 hour chart, 5 minute. So that's what it's there for. So I mix and match. Sounds good. Thank you for the question. Any other questions? Yeah. So that's a good question. Hold on for that. So first, you want to look at the hourly, see what's going on when we open. We could open up here, we could open down here. Look what we did today, right? Weird movement. Okay. You want to go to the 15 minute. You want to look at the hourly first, just to see what's going on with price, right? Then you want to go to the 15 minute to get your entry. Now, to be honest, my entry today was early, just because I thought there was momentum and the stocks was coming back. It was early. I didn't need to do that. Again, I looked at the hourly chart. I said we hold in nice. We could be good to go. We didn't. We weren't good to go yet. If price is still holding the hourly chart, fine. If you go to the 15 minutes tomorrow and you get the 9 or 21 and you look and say, okay, ooh, we holding about, let's see, look, this is a good example, right? If price open like this and it pulls back to the moving average, it pulls up, pushes up, pulls back, pushes up, you want to get in when it pulls back to moving average. When it gets close to the purple line right here and starts going up again. If it comes back and if you see 1, 2, 3, 4, 5, 6 candles like this in the first 15 minutes, first 15-minute candles are like this, and it pulls back like this, goes higher, back, higher. Get in when it's down here or here, one of these, because then it's going to continue going higher. This is what we call respecting the moving average. This is really what this is really your entries when it pulls back to the purple line and starts and continues going higher. So just watch out for that. That's how you would enter tomorrow. You're welcome. And again, you could feel free to tag me in the chat tomorrow when you're thinking about entry and asking, is it a good time to get in? A couple people did that today and they got in at a nice price, You're welcome. Yeah, I use support and resistance mixed with a bit of I use support and resistance mixed with the EMA, so the 9, the 21, the 50 or the 200. And then I do sometimes use the RSI or the MACD. So more the MACD than the RSI, but actually I've got my RSI on this chart. I'm assuming you know what the RSI is. If not, it's also okay. Yeah. Okay, yeah. For those of you who are beginners, who don't know what the RSI is, it's the relative strength index. It's pretty much kind of what I use to gauge momentum, also gauge if a stock is overbought or oversold. I don't want to get too technical with it, but when the RSI is up at 70, it means it's pretty much overbought. When the RSI is below 30, pretty much means it's oversold. And RSIs can go between 0 and 100. So, yeah. It's just something to tell you what's, tell you what the stock is doing, what kind of price changes to expect, how to detect overvalued or undervalued stocks. That's it. Yeah. Any other questions? I like the questions so far. You guys have come with good questions today. Okay. Yeah, with the RSI, I would just if you're trying to enter calls, you want to see. Okay, here's a 15-minute chart, right? You want to see price somewhere in around here. The 40s, 50s is okay, right? If you're at the 30s, cool, but it could be if it's at the 30s, it could be just dead in the water. You don't have to use the RSI if you're trying to, enter trades and stuff. It's more if you want to see what the stock is doing overall. So I'd go to the daily chart. I'd see PayPal's up here. All right, cool. 70 on the RSI. Not my best entry for shares or calls, this and that. But if I'm not trying to get into, if I'm not too particular about my entry, let's say, then again, go to 15-minute to 1 hour. You'll see a different story. But again, the RSI is more. It is more for the long term when you want to see if something's overbought, good price to buy in now, oversold, that kind of stuff. Any other questions? Yeah. Hold on. The call out right now is short term. So, like I said, let me put it in a better way. What stock is undervalued right now? What stock is undervalued? Maybe Toll Brothers. What? Yes. Okay, here we go. Hey, see, I know my stocks. Toll Brothers right now. RSI is around 50. If it starts uptrending again soon, it's a nice time to get in. It ain't way overbought. It's not way oversold. It's at a good price. If it was RSI was at 70, I would stay away. If RSI is at 30 and it starts uptrending, even better reason to get in. Let me see Alibaba. There's another example. If Alibaba starts uptrending soon, RSI is at 36, 37. It's a good price to get in. Does that make sense? Cool. Thank you. Any other questions? The questions have been really good so far. Yeah, I can hear you. Yeah. Yes, it is. Yeah. Do you want me to put it in the chat after? Can you just tag me to make sure you just to remind me because I'm going to post a couple of links and stuff and I just don't want to forget to drop the indicator as well. No problem. Great question. Thanks. I'll call mine out. I will definitely call mine out. Any other questions? Excellent. Right now, that's a very, very, very good question. Cool. That's a great question. So, yeah, that's a very good question. So it's very suspect. That's why I said this question is tough. Hmm. Yeah. 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 Right here. Yeah. Yep. Oh, it's just that was one of this is a great question, This look guys, it's broke above the zone, it's above the moving averages, but these long wicks, it's just holding price at this level here. It's almost kind of just consolidating before we, either drop back down, knife, or we break out and we rise $6. Ooh. I don't trade strat, but I know strat. Oh, you have to use the indicator, isn't it? So yeah, What's it now? What's it now on the strat? Oh, you got till Friday, bro. Bro, you got to Friday. Yeah. So you needed to break out. You really needed to break out tomorrow. Hold on, hold on, hold on. Tomorrow, really. You know what? Tomorrow, price can hit. Yeah, 121. If it can just go back again. Yeah, you don't need it to blow out of this range yet. Not even a range out of this concentration. Yeah, you could still get it. Yeah. Oh, yeah. Yeah. Oh, it is, especially where it's at now. Hmm. Yeah, hanging man. Hmm. But but you're actually right because this right here, hanging man, it could be a reversal to pull back a bit. So I don't even know where 590 before we see any kind of continuation of our uptrend back to 600 and above. Yeah. Yeah. Exactly. Which buy could drop back to back red days, hanging man, and top it out at 600. All those things. Yep. 9 So wait, hold on. 8:30. There you go. Yeah. 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 Hanging man. Exactly. Hanging man is red, look like a hammer candle, but a bit of a longer wick, and it comes after the bull trend or bullish uptrend. So hanging man followed by a red day and maybe another red day or whatever, but it's usually kind of like not the end of a bull run, but like a reversal. Let's call it a reversal indicator when stock might reverse after obviously uptrending. Yes. Depends what depends what I'm trying to do. So if I'm trying to swing trade, I'll look at the 4 hour, the daily, maybe the weekly. If I'm trying to day trade, it'll be the 1 hour, 15 minute for entry. It's 1 hour to gauge what the price is doing, 15 minutes to get my entry, 5 minutes to get my entry. Like either of them if I'm day trading. Um, that was a great question as well. Thanks for that. So, for example, today, I kind of look. Spy dropped. How many? $5. I didn't get one piece. It's okay. Yeah, you know. Um, any other questions? We coming up on an hour. And by the way, if you, I know a couple of you did ask me. Make sure you DM me if you do want a one-on-one. That is completely fine. I do still do those. I haven't really put it out there, but I still do those. Opening up the website again. For those of you that did ask, I do still do the one-on-ones. So that is definitely a possibility. So let me know if you need that or you want that. Um, yeah, any more questions in the meantime? Yeah, I remember I left you hanging in 2021. I know, right? Thanks, guys. If you want a one-on-one, DM me, spam my DM. Let me know you want a one-on-one. I'll give it to you. Good question. Let me before I answer it, let me rephrase it to you. If we start with $500, what kind of returns would you expect? Let's talk about dollar amount. What kind of returns would you say is a good amount 31 days from now, but that you'd be satisfied with? Yeah, I'll give you this. I'll give you this. From $500 right now, I can guarantee you we'll be sitting at least 1,500 right now. A month from now, 1,500 at least. That's conservative. But you when you forecasting, you go conservative. But yeah, I'm confident. I'm confident. Like last week, not every week is going to be like last week. I know that. Last week, what we did last week was kind of maybe a once in a year thing. There was no way we were going to do that again straight away. I mean, it's still possible, but I'm just saying, yeah. Realistically, 1,500, 31 days from now, I guarantee that. I'm not like I guarantee that one. Yeah, no, no problem at all. Any yes, well, in theory, yeah, yeah, it's one trade. Yeah, it's still one trade, but yeah, it's still one trade. It's still one trade because it's four contracts. It's still one trade. Four contracts of the same stock, the same strike price, same entry price. Yeah. Say, yeah. Yeah, it's still one contract. Sorry, one. It can be multiple. It's still one trade. Raggedy. Any other questions? Yeah. Yeah. 100%. We'll take this, but it's whatever's on screen now. Let's say you get in puts, right? It's going down. You see it going up. Pay attention to the moving averages. You talk to Walmart. Pay attention to the moving average. And if you're busy and you at work and stuff, just drop it in the chat real quick. You guys still in Walmart? Can I get a chat on Walmart? Anything like that? We'll tell you. If it's still paying attention to moving averages, even this puts, it was still okay. Anyway, yeah, pay attention to moving averages. That's what I would do. And if it's really stressing you out that much, if you've got enough days till expiry, go for a walk, step outside, drink some coffee, focus on your work, do something different just to give yourself a little bit of time. Because if the whole chat is in and we all seen the similar thing, you can kind of trust the play. You can kind of trust the play. No problem. I'll drop the link for the. Any other questions? I'll drop the link now. I'll drop the link now for the if you need to what you call it if you need to schedule 101 or if you need to RSVP for the Royal Trading meetup. But yeah, that's kind of what I wanted to discuss today because I know there's a lot of newbies in the chat. This recording is going to be uploaded to YouTube, so if you need to watch it back, let me know. I'm also going to drop another video in the chat which explains everything about options. It's completely free. It's going to tell you about buying and selling calls, puts, all that kind of stuff. Because I know a lot of people was a bit confused. It's very simple and it breaks it down very well for you. I'm gonna drop that in the chat, like I said. But if there's no other questions right now, then yeah, I'll catch you in the chat. Just type to me, and then we see what's going on. And we back at the small account challenge tomorrow. I'm ready for it. Yep. Yeah. Hey, I see who's been listening in the one-on-ones with me. I see. Thank you, bro. And I appreciate it. Which reminds me as well, if you guys want to do a one-on-one, and it doesn't matter how early it is, I did one with June. We did it together. June is the guy that was just talking. We did it together at 6 a.m. It's all good. Whenever you got, oh, it might have even been 5 a.m. Either way, it's all good, guys. Just let me know. But I appreciate you guys for tapping in, showing love, listening up, asking good questions, answering good questions, all that kind of stuff. Any other info you would like, just drop it in the chat. I'll do a poll to see what we do on our next session. And yeah, we go back at it again tomorrow. Appreciate you. If you enjoyed it, drop it in the chat. Let me know. Thank you, guys. Peace. Welcome. Welcome. You're welcome. Always. You're welcome. Glad to help. Of course.